Hey everyone, welcome in to another daily editorial here on the KE Report. We're focusing a bit more on silver stocks with Erik Wetterling, founder and editor of the Hedgeless Horseman. Now, Erik, look, we can dissect all we want the silver stocks, whether they're minors, mid-tiers, or juniors, but fact of the matter is, unfortunately, a lot of these stocks are just drifting lower and lower and lower, like a lot of other, I guess, resource stocks outside kind of that handful of stocks that we have discussed. But Erik, overall, how do you look at these silver stocks, either with ounces in the ground or exploration plans or producers, when they're all just getting revalued lower?
Well, I haven't been really that bullish on most silver juniors in quite some time. The last time I really had, at least in my, let's say, actively managed portfolio, where I actually had a lot of silver, was back in 2015. And I remember back then, it's like pretty much all I did. It's like I heard silver was cheap. I looked at silver juniors. I saw a bunch of them being down a lot since 2011. I mean, I kind of just mapped, okay, which junior is down the most. And I just went around looking for stuff that was down like 90, 92%, 93%, and stuff like that. First Majestic, Endeavor Silver, Bear Creek Mining even, I think Avino. I mean, that is basically how simple my quote due diligence was back then, because I had no idea, what makes a good mine or anything like that. I just kind of bought the stuff that was most bombed out. And since then, I mean, we know what happened afterwards. 2016 came, epic rally. And that kind of, I think, got some speculation going again in the sector. And I think I've said multiple times on this show that I've almost always felt that silver juniors have traded with a speculative premium, because it's like that's the go-to thing. I mean, back in 2016, they were pricing in higher silver price than where it was, even though silver had made a big rally. But now I'm seeing a bunch of stuff down like 88, 90, 92%. I've started actually to slide into some of these silver juniors, and most of them, like, make no mistake, I see them mostly as trading sardines. And I looked up a few of them, like 7 companies I looked up, silver developers. They have some kind of, resource in the ground. It's like their market caps, like 36 million, 36 million, 33 million, 35 million, 36 million, 35 million, 36 million. So they're kind of showing that they are all put in the same category. So I think that just shows how much, regardless of what the actual fundamentals are, how much they are traded like the exact same thing. Speculation on silver prices.
Yeah, Erik, I think this is such an interesting topic because when we talk about precious metals mining stocks, silver are the most volatile of the group. The most stable are the royalty companies, then the gold producers, then the gold developers and explorers. But the silver producers do okay, sometimes along with the mid-tier gold producers. But when you get down into the silver juniors, the developers and the explorers, they're just insane to the upside and the downside. So if the market's in a bad sentiment funk like it is now, they're just absolutely destroyed. They're the most destroyed part of the precious metals complex. But on up cycles, they also blow past everybody else and they have the biggest gains. So it's just the most speculative space to be in. It's interesting to hear that you finally are looking at the silver stock, because I've heard you make that comment many times that they had a premium. Do you think some of the reason there's a premium is there's just not that many of them compared to gold stocks where there's almost 1,000? There's really only about 100 silver stocks. Do you think it's that there's, when money comes in, there's just less opportunities from the squeeze into, kind of like what we're seeing in the uranium space?
Yeah, I mean, that makes a lot of sense. If you are person X and you're dead set on buying silver juniors, you're not going to think of how many they are or whatever, or what they're trading at. You're just going to want to get exposure. X amount of people chasing fewer stocks than the gold stocks, I mean, it's going to get them to run even more. So I think Rick Rule has made that comment as well, that it's like it's simply such a small sector that when money wants to get in, it's like, trying to get the Hoover Dam through a garden hose or something. So I think that's very accurate. And it's like, I mean, I look at some of these more trading sardine types. I mean, they crash on a regular basis. And by regular, I mean like every 2 or 8 years at least. 65 to 89%. The thing is, if they're still around, they always rally. And like you said, more than most. So it's like, I'm not to be honest, like from a pure beta risk reward perspective, I do think the gold developers are much better because gold actually does not suck right now. So they actually have projects that could be worth something right now. Most silver juniors, they have silver projects and they have been slammed like 90%, but their projects probably don't make too much sense. So it's like that is the speculate part in me. But then again, it's like what is more unpopular than the riskier? I'm not going to say riskier, but it's like this part of the sector is what has sucked the most. So I think people are more turned off than it's like, well, pick any major crash basically. Nobody wants it because they have seen none of them work, and they basically, some of them at least, converge to the exact same market cap, which I find just hilarious. So it's like I have a hard time believing that every single silver developer company in that range is exactly identical. I think there's some, not hidden gems per se, but it's like I think there's room to be somewhat of a stock picker, even though the main bet is that, hey, when the next sentiment flood wave gets going again, which is going to happen, we just don't know when, could get fun.
So Erik, if you are in there bottom fishing, what kind of silver stocks are you looking for? Jurisdiction-wise, asset size, stage of project? What gets your money first?
I'm trying to work that through myself right now because that's the stuff, share structure and all that boring stuff. That's not really something I've paid too much attention to, actually. I mean, probably to my own detriment. But first of all, I would like to spread it around. And this is not going to be a major part of my portfolio, I don't think, at least. I mean, unless they, go down 50% from here, more, but I don't see that happening. So I try to look at share count a bit. It's like, okay, which are have 500 million shares out versus 200 million shares. I'll probably go with the 200 million shares or favor that, and then some jurisdiction. There's some rumblings about open pit mining in Mexico, for example, probably not going to go through, but still that might put a damper until that's cleared out. And then also like, okay, look at what's the skin in the game here. It's like, how much do they care about the stock actually going up? How much do they work for a salary? And also like some that have actually made financing recently have some kind of cash at least, because otherwise it's gonna suck a bit that first uptick private placement immediately and with full warrants, but the ones that are actually doing financings recently, they do put out full warrants, and I've tried to get into some as well. So it's like on that point, it's like, hey, if there's any point I would like to be in placements with warrants, it probably would be silver or beta overall right now. So that's I'm constantly nowadays on the hunt for like some actual beta bets, and if I can get private placements, that's even better because that skews the risk reward so much, simply because there's no added risk. You just get more upside, need even less of an hit rate. So I mean, that's not everybody can do that, of course. So that's why it gets a bit tricky, I guess.
Well, Erik, let's hone in a little bit more on the alpha versus beta topic. We've talked about this before, but as it relates to silver, it's similar to gold, same kind of idea that for the last couple of years, people have been trained that the only thing that works is alpha. You got to find the company that makes the drill hit, makes a discovery, they get rewarded. Everybody is a herd and floods into that stock and it goes up. And that's happened to a handful of companies only out of the 1,000 out there, which means that the other 995 companies sucked wind. That same kind of idea could be applied in silver. There are a few that'll make a discovery that'll turn some heads and they'll go up. But when you say you're into the beta, maybe break down what you mean a little bit more. I know what you mean, that there's ounces in the ground that they've already done a lot of work in the past, they're not getting value for, and you think it'll get revalued higher. Is there anything beyond that you look at for the beta? Are you looking at past performance? Are you looking at a certain amount of ounces in the ground? Are you looking at the quality of the ounces, whether they're underground mining versus open pit, as you mentioned? Dial in a little bit more of the beta side of it that you're looking at.
I don't really have a good answer there, because again, it's like if my default setting is kind of trading sardine, then you don't do the necessarily huge due diligence, because it's like, I mean, let's put it like this. you're not going to find better or higher quality names, in my opinion, in the junior silver space than the gold space. I mean, there's only a few silver juniors I actually think are good companies, etc. So it becomes much more a play on psychology. So yes, I mean, high grades, for example, that might attract some, but at the same time, it's like, why does Bear Creek go up so much? Because they had the Coroni deposit, low grade, huge silver endowment. And it's like the Discovery Silver, Discovery Metals. I remember I bought the predecessor, which was Levon Resources. I think I bought it in 2015, 16 or something. It was trading at 18 million market cap. I mean, Discovery Metals, they took over that asset. I don't remember the name of it. And that reached a market cap with the help of Taj Singh, who was running Discovery. I think they topped out at 750 million. I mean, it's the same deposit and they did a lot of work, but it's like, so I guess that's actually more of an alpha play. But my point being is that some are attracted to higher grades, and especially in better jurisdiction, let's say. But when we go into the late stage, it's all about how much silver do you actually have, because at some price point, everything works, anything works. So it's like I don't have a good answer to that, and that's why I'm being kind of cautious, like not touting any specific company out there, because that's my this is trading sardine mentality for me. This is not something I'm like, oh, this company's absolutely great. This is a buy and hold or whatever, which I try to focus on most of the time. And that's why alpha is typically where you go for that, because a trading sardine by definition is not something you should or even could buy and hold and expect to make any money. So it's like I'm still working it out, but so far I'm mostly looking at what's actually down the most. Do they have some cash? Are they doing some work and try not to pick the shittiest unless they, are lower value than the rest. But again, to my earlier point, many of them have converged kinda. So I'm just trying to pick the least bad apples, let's say.
Fair enough. You outlined a couple of things there. Make sure that they have some money, that they are doing some work, and quite frankly, a lot of them are down 50, 60, 70, 80% from their highs of a few years ago. So you do have a wide variety of stocks to choose from. Erik, I have to ask then, what are you selling to rotate this money? Even though it's not much of your portfolio, what positions are you trimming to free up that capital to buy these silver stocks?
So far, it's mostly been new money. I've sold some of Hercules Silver, for example, cashed in on those warrants, which provided a good, nice injection of dry powder. But otherwise, it's mostly like trimming here and there, because it's like I don't think anything I hold is a clear sell in any way, shape, or form. So then it comes down to some, short-term volatility. Maybe one stock is up 10% that I can snag a bit from or something. And of course, it's like I might completely turn around tomorrow. Let's say I have some mostly alpha cases and some of them just gets absolutely slammed. And all of a sudden it's like, okay, even though I think these, beta plays are probably a good bet, but I might sell the silver juniors tomorrow if there's enough volatility in some actually high quality, maybe a hybrid alpha and beta, whatever, that sees that go down for no real reason. So it's like, as I always talk about, it's like, this is my way of value shuffling. I mean, I bought some, what was it like? I bought some I-80 recently, but I actually have sold some I-80 to buy some of these. And I like a I-80 a lot more from like fundamental value perspective. And I think that's dirt cheap as well. So it's like, it depends. I was going to say it depends, and I might change my mind at any point in time, because I don't try to predict too much and see what the market gives me in terms of volatility. Since now I'm interested in these silver juniors, if they wouldn't have gone down 90%, I wouldn't be.
Fair enough. So you're starting to dip your toes into some of these silver juniors, but not too aggressively. Who knows? There still might be some more downside here, but you are right in terms of they all seem to have corrected down to similar market caps, no matter what assets or jurisdictions they are in, with a couple silver stocks, we can say, bucking the trend and at least moving sideways, which seems to be the new up. Erik, thank you very much for, I guess, your insights here on why you're getting into some select silver stocks. Erik, we'll chat again next week.